The Heikin Ashi RSI oscillator is probably one of the best indicators for scalping on TradingView. This amazing tool can eliminate the range in market really well and also spot the times when the security is overbought or oversold. This information is very useful for retail traders who are looking to get better trade entries and make more money. However, a vast majority of them don't quite know how to use Heikin Ashi RSI correctly, which causes a lot of frustration and blown up accounts. So in today's video, I decided to share my best Heikin Ashi RSI strategy for trading forex that will be making you massive profits like this on a daily basis. I will also backtest it 100 times so that you can see the real win ratio behind it. I use Trader Edge for backtesting strategies. In my opinion, this is the best backtester out there. Thousands of traders around the world are using Trader Edge to get an edge in their competition. Trader Edge is 3 times faster than a traditional backtesting method. All you need to do is to set your initial account size and the profit and loss per trade. Trader Edge will give you all the info you need about the strategy, such as the win ratio, the profit and loss, the maximal drawdown, and much more. Once you finish the backtesting, you can save the results to the strategy library. Besides their quick and easy backtester, they've also got some other useful features on their website, such as the position size calculator, which can be really handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem. You will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll also include 4 pre-made high-quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is absolutely no risk at all. So go ahead and check it out. I will leave a link in the description below. Okay, we're currently looking at the price of Kiwi dollar USD on a 1-minute time frame. I highly recommend to use this strategy on lower time frames such as 1 minute, 5 minutes, or 15 minutes. So in order to build the setup, you need to click on the indicators option and type in RSI. Then you want to select the Heikin Ashi RSI oscillator by J. Rogers. Now let's double click on it, and in the input section change the length from 14 to 10 and the open smoothing from 1 to 5. Then head over to the star section and hide some of the options just like I'm doing right now. And the reason I changed the settings is to make the indicator more smoother and easier to read. For the second indicator, we're going to need to add an exponential moving average. Its length is going to be set at 200. And we're going to make it colored in white. And for the third indicator, let's add higher high, lower low strategy. In the star section, uncheck everything except for higher high and lower low. Okay, the setup is ready, and now let's quickly understand the logic behind it. So the number one goal behind the strategy is to identify the trend direction first. For that, we're going to be using the exponential moving average. If the price action is below the EMA, the market is considered in a downtrend. This means that we're going to be taking only short positions during this time. On the other hand, if the price action is moving above the EMA, the market is considered in an uptrend, and we're only going to be looking to buy during this time. Once we identify the overall market direction, we're going to be waiting for the price action to make a pullback. For example, in a downtrend, a pullback is valid when the Heikin Ashi RSI gets overbought, yet the price action is not making new higher highs. This is very important because if the price action is making new higher highs, this might be a signal that the market is reversing. With that being said, a signal to go short is valid when the following conditions are met. First, the price action is below the EMA. Second, the Heikin Ashi RSI gets overbought. For that, the candlestick can either touch or enter the red zone. Third, the Heikin Ashi RSI must form a red candlestick. Fourth, the very recent label on a higher high lower low indicator must be lower low. If by the time the Heikin Ashi prints a red bar, the price action makes a new higher high, the signal automatically becomes invalid. And the last condition is to have the bearish candlestick formed in the market at the time the Heikin Ashi turns red. The stop loss will be set at the recent swing high. For this strategy, you're not going to set a specific take profit target. You're simply going to be looking at the price action, and if it reaches the risk reward ratio of 1:1, then you're going to have to move your stop loss to the break even. When the price action reaches a 2:1 risk reward ratio, you're going to set your stop loss at 1:1 risk reward. And if the price action hits it, your trade will automatically be closed. Here's another example for a short trade. We see the market is still being in a downtrend. The Heikin Ashi RSI touched the red zone. The red candlestick has been formed. The market has not made a higher high by the time the Heikin Ashi issued a signal, and the current candlestick is bearish. In this case, we see the price action reached our second target, and since our stop loss was moved to 1:1 risk reward, on this trade we could have made good profit as well. The rules for taking long trades are going to be exactly opposite. First, the price action must be closed above the EMA. Second, the Heikin Ashi RSI must get oversold. And again, the candlestick can either enter the green zone or simply touch it. Third, the Heikin Ashi RSI must form a green candlestick. Fourth, the very recent label on a higher high lower low indicator must be higher high. This means that the price action is not making lower lows, which is a really good signal. If the market makes a new lower low before the Heikin Ashi issues a signal to buy, this signal automatically becomes invalid. And the final condition is to have the bullish candlestick formed at the time the Heikin Ashi turns green. The stop loss is going to be set at the recent swing low, and just like with the short trades, you're not going to set a specific take profit target, you're simply going to move the stop loss every time the price action reaches a new risk reward ratio. In this example, 6:1 was the maximum ratio the market reached before the price hit our stop loss. Since we're risking 2% of our account per each trade, on this particular trade we could have made 5 times the risk. Here's another example for a long trade. We see the price is closed above the EMA, the Heikin Ashi RSI touched the oversold area, and then the candlestick turned green. The market is not making lower lows, which gives us plenty of confidence when entering this long trade. We see the market reach the maximum of 4:1 risk reward ratio. Our stop loss was set at 3:1 risk reward. The market triggered it, and we closed this trade with a nice profit as well. The only downside I see behind the strategy is that you're not going to be getting a lot of trade entries. This is because the price action is usually making lower lows and higher highs at a time the Heikin Ashi gets overbought or oversold. If you want to have more trade entries, don't worry, I will show you how to increase the number of them at the end of this video. But for now, let's do the backtesting to see how well this strategy works in different market conditions. Okay, the backtesting is finished and the numbers look absolutely crazy. The win rate of this strategy is 74%, and because we had this smart money management in place, we increased the account size by over 1700%. Keep in mind that these numbers will be different when trading live because of spreads and fees. The profit factor is 6.88, and the largest profit trade we took increased the account size by 28%. We also had 8 consecutive wins against 2 consecutive losses. By the way, the strategy achieved these results in 3.5 months. Okay, now let me show you how to increase the number of those signals. The only thing you need to do is to get rid of the higher high lower low strategy and add a simple volume to the chart. In the star section, enable the moving average and set its length at 30. Now, the conditions for entering a long trade wouldn't be that different. First, the price action must be closed above the EMA. Second, the Heikin Ashi RSI must get oversold. Then it must form a strong green candlestick without a lower wick. And at the time it does so, the volume must be green and the bar must be above the MA. The money management will stay the same. For short trades, the price must be below the EMA, the Heikin Ashi must get overbought, and then it must form a strong red candle without an upper wick. At the time we have the signal, the volume must be red, and it must break above the MA. This way you will get a lot more trade entries without sacrificing the quality. By the way, let me know in the comments if you want me to backtest this strategy as well.